welcome back to my channel. So today I listened to Powell's speech about his concern about the economy.
Just their own health and that of their loved ones, but also their neighbors and the broader community. While we're all affected, the burden has fallen most heavily on those least able to bear it. The scope and speed of this downturn are without modern precedent, significantly worse than any recession since World War II. We are seeing a severe decline in economic activity and employment, and already the job gains of the last decade have been erased.
They mentioned that although the Fed has taken a lot of measures to help the economy, cut the Fed fund rate to 0%, but he still forecasts that the economy will be go down in the near future. And so as I mentioned in my previous videos, I'm thinking about what stocks or what industries to invest in order to keep gaining, or at least not lose the value of the assets in this downturn. And one of the sectors I've discovered before is the food industry. And in my previous video, I've talked about McDonald's, Coca-Cola, and so today I'm gonna talk another of the company. It's Kraft. The ticker symbol is KHC. So now let's get started. So in the following, I'm gonna talk about the companies from fundamental side as well as from the financial side, and after that I'm gonna talk about the stock price right now and how I would think whether it's a good time to buy in for now. So first, as for the fundamental analysis of that company, was the merge between the company Kraft and Heinz, which is both a food company, and the two companies merged 5 years ago, and they got listed in 2015. And the company is very famous because Warren Buffett is one of the biggest shareholders. He accounts for more than 20% of the company shares, and because of that, I think it gains a lot of confidence from the investors. But I think in the past several years, the company didn't perform very well. And today I just go to the Smart Stock Screener and check some fundamental data as well as the stock price. And I saw that in 2017, the highest point has reached to $90, but right now the price is just $28, which has dropped a lot, more than 50%. And so that makes me very curious about why is that, what's the company's business model, and what's their product line, and how they're doing right now. So I look at their website and checked their product lines, and I found they have a lot of products that I really like. The company has a variety of products, and I'm a big fan of some of the products. So for example, I think their most famous is the Heinz tomato sauce, that if you go to a restaurant you can see there's one Heinz tomato sauce on the table, and a lot of people use it at home and to go with French fries, eggs, to make burgers. And also another of their popular products, the cream cheese or the cheese bread, the brand Philadelphia. And they also have some more very popular cheese product that I got at home, and I think their product tastes very good. I look at their composition of their product lines. So it shows that 25% is condiment and sauces. It's tomato sauce or salad dressing, and around 20% of the revenue comes from the cheese and dairy, which is a lot of their popular products, the cheese product and the mac and cheese meal. And they also have the ambient meals, which accounts for 10% of the revenue. It's the ready to eat meals, which have a long shelf life. So recently, as a lot of people are afraid of the food shortage, and they begin to stock stock up a lot of food, so those food would be one of them that the consumers want to stock up because it has a very long expiration period. So when we look at the geographic segmentations, we can see that US sales accounts for 70% of their revenue, while the rest of the world accounts for 11%, and EMEA, Europe, Middle East, and Africa accounts for 10%. And also Canada accounts for 7%. Now looking at their financial data, their sales in 2019 is 25 billion, which is a big number, and that makes the company it's the 5th largest food companies in the world and 3rd in America. But when I look at their like revenue compared with 2018 or their net income from 2018, it doesn't grow and it actually have a decrease. But I look at that the company currently have a good cash flow, so I wouldn't worry about that the company may go bankruptcy or something. And today I watched the interview with their CEO. The CEO mentioned that recently, because of the pandemic, a lot of people try to stock up food and try to cook at home. So some of their products like mac and cheese or like tomato sauce become very popular, and that would be people's choices for their meals in this special period of time. So when I combine Powell's speech and the CEO's announcement, I feel like the company do have potential because currently food is one of the essentials for people. So even though people don't spend money in other areas like to buying new iPhones or to buying new computers, they would definitely spend money on food. And Kraft Heinz, as one of the largest food companies, which would probably give the consumers confidence to purchase their product. But at the same time, I do think the company have some potential risk that the investor may be cautious about. The first one is competition. So nowadays, not just because of the competition from the major players in the market, like Nestle or another company, PepsiCo, that I mentioned before. But there's also a lot of private label companies like the brand from Walmart or the brand from Target. They're also potential competitors. If the price is cheaper, maybe the consumer would choose some other products that in this period. And the second reason, I think nowadays people are more concerned about health. And when I watched the documentary on Netflix, it's about, I think the name is What the Health. It talk about like some food producer companies, they emphasize on sales, but rather they don't pay attention to the health. And a lot of the products, although taste good, but they're not very healthy. So yeah, that's another reason, so that people may switch to other healthier alternatives, like what is currently very popular, the veggie products such as Beyond Burger, with the lowest 52 weeks lowest price, which is $19. The current $28 is not that low, and but I do think it's within a considerable range to buy in, because the stock do pay a good amount of dividend. It's like around 5%, so that even though the stock price go down a little bit, the investors still can get the dividend as one of the reward of the investment. And in the future, I do think the company has the potential to going up, because they do have the good product, and they provide value to the consumers. Like those food will give, I think that those food will give consumers comfort during this special period. And yeah, I do have confidence in this company, and would be one of the stocks in my watch list in this month. So that's all for today. Thank you for watching, and I will see you guys in my next one. Bye.